FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 12/17/19. Well, this year is just about over. What an exciting year it's been. We had the repo meltdown. We had the China trade imbroglio. We had spreading, creeping wildfire, civil unrest, and civil disobedience, mostly outside the United States, in Hong Kong, and in France, and in Iran, and in Venezuela. What a year it has been. We saw gold take off and kind of hit a trading range right now in the upper to mid 1400s thereabouts. Silver right around the $17 range. Well, what is in store for the coming year? Are there reasons that you should finally be bullish on what has been an extremely moribund sector of the overall market? Yes, says Jordan Roy-Byrne. And you find him at thedailygold.com. Jordan, welcome back. It's great to have you on. So you're bullish on the sector, aren't you?
Yes, I am, Kerry. And in particular, I would say I'm a lot more keen on the miners, because if one just looked at gold and silver, and a lot of mainstream people, that's all they do. They just look at gold and silver, and they can look at those and say, yeah, the stock market's making new all-time highs. The metals are correcting. They don't look, they look like they need more correcting. But, that kind of person, they would ignore what's going on under the surface. And what that is we see the miners are outperforming the metals to a very nice degree. And, before we started recording, I mentioned the GDX advanced decline line a couple times in the last couple weeks. This has hit a 3-year high. So, a couple months ago, it was showing a positive divergence. It was making higher lows, higher highs. That thing has turned into a 3-year high. So that is a powerful bullish divergence that we're seeing in GDX. And Kerry, the interesting thing is GDX isn't even the strongest subsector of precious metals when you're looking at the stocks. The GDXJ, the larger juniors, that's been stronger than GDX. And even the silver stocks have been getting a bid and outperforming the gold stocks. And so those are the riskier parts of the sector that during a correction really should not be acting like this. So it's interesting, because when I look at the metals, I still think we could have a little bit more downside. But looking at the shares, I mean, they've just been relatively strong, and they're just setting up for what should be a really good 2020 when we step back more than a couple of years and look at these huge bases on GDX and GDXJ. I mean, if these can break above their 2016 highs, they're really going to get going to the upside. And I think, all the indications technically, and I know fundamentals, which we'll get into, that is telling me, I'm very confident that 2020 for the stocks is going to be a very good year.
Yeah. So what particular sectors? You think explorers? Are we looking at producers? Or are we looking at royalty companies? Which sector you think is going to have the best performance?
That's a really good question. I could go a couple different ways with that. I think with the way things are setting up, I think the performance will be widespread throughout the sector. I think the smaller juniors that many of us follow, I think that those will start to really get a bid when we see GDX break above 31.32, which is the 2016 high. And I think we're going to, with the way the stocks are acting, Kerry, I think we're going to see GDX break above its 2016 high there before the price of gold does. So that's something I would, if I were in the audience, I would key on that. I think the stocks are going to move a little bit before the metal. So I would watch that 2016 high for GDX, which is, it's a little bit ahead of where GDXJ is, even though GDXJ is outperforming. I think GDX is going to take out 31.32. That'll be the first next breakout in the sector. And so I think, like I said, I think it's going to be widespread. I mean, I think I would say silver stocks, but gosh, they're already doing so well. So I really think it could be anything and almost everything. I do, royalty companies, I would say, I don't dislike them, but I think if we're going to get into a really strong trend here for the sector, royalty companies will underperform on the upside. I know they've been very popular and they've done very well over the last 5-7 years. But I think if we get this really strong move, and that doesn't mean I think you should sell royalty companies, but just I think we should understand that those types of companies, they're probably going to underperform on the upside. So really, I think it's obviously I want to be stock specific, at least as far as my own investments. I think you could find, there's producers I really like, there's explorers I really like, there's maybe a few developers. So I would say almost anything and everything. Just focus on trying to find the best companies, or if you just want to be safe and you don't want a headache, just buy GDXJ and hold it for a while.
Yeah. So GDXJ, that's kind of your one decision, no brainer type thing that's going to take you there, huh?
Absolutely.
Interesting. And if you're feeling a little more risk tolerant, then what?
Then I would look, across the board. I would look at, when we're looking at producers, I really like small companies that have the ability to grow. I mean, we know that growth in a bull market, the market loves growth. It doesn't matter the sector. So I like producers that have the ability to grow production beyond just one mine, or if it's one mine, it has to be something they can grow in stages. As far as developers, it has to be something that's really cheap and that can gain a lot of value at, let's say 1,700 gold or even 1,900 gold if we get there in a couple years. And then, explorers are obviously very risky. So I like to look at across the spectrum. But generally, if you look at when juniors perform the best, there's that life cycle of a junior chart. I mean, there's many different versions of those you can find on the internet. But the times when they generally perform the best, there's two times. The first time is when they're an explorer and they make a discovery. So with that, what I'm trying to do is get into something maybe as they've started to make a discovery, or it's small and has a lot of upside. So that would be the first part. The second part is usually, 1 or 2 quarters before they begin production, or they have a new mine that's coming on. Along the life cycle curve, those are, if you're looking at individual juniors, those are the two spots you want to be.
Right. And this is kind of a predictable pattern. So what about the predictable pattern of the Q4, Q1 precious metals rally? Do you think this year is going to be different? Because there's, in the past, it's a roughly 80% chance of seeing that rally. And there are market reasons for it. Let's face it. It's wedding season in India, and it's end of the year, Christmas shopping. So actual physical demand in the jewelry market, at least, goes up for gold and precious metals.
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Right. Yeah. I'm not a huge proponent of seasonal analysis, but I will say I did a study of that. I think January, just looking at how, what month is the best month as far as, what percentage of the time it goes higher. And I think it was January, and I want to say I think August and January were the 2 best months when I looked at it. And obviously there's tax loss selling. And so the market has been very weak going into the end of the year, the last several years. I mean, even 2016. And so you had this natural bounce in January. I'm not sure we're going to see the same thing again this time, just because 2019's been a good year. And looking at gold and silver, I would not be surprised. Gold's trading around 1475. I would not be surprised if it tested 1410 or 1415, and silver trading around 17. If that came down to the low 16s, that would not surprise me. So I'm not super keen on the short term. And looking at the stocks, just looking at the short term charts, if they don't break above the highs of the last couple of days, we could be in for a little weakness into year end and in January. But I don't. It's not that strong of a prediction. I'd not be surprised if that happened into January, just because we had a little bit of a different year than we've normally had in recent years. But we'll see what happens. I mean, if you're dealing with tax loss selling and you're looking at something that's just completely dumped and oversold well into the end of the year, that will probably bounce in January, even if the sector doesn't.
Yeah, that would make sense. And, that's the other thing. I'm sorry. I neglected to mention tax loss selling, which is much more a Canadian phenomena than a U.S. phenomena, right?
Yes, because we're dealing with, in the resource sector, we're dealing with so many small companies. And I haven't done a study of the advanced decline line, but I'm guessing that generally it's pretty weak because you have all these companies that aren't especially strong. I mean, they're basically venture companies. They're not real businesses. Correct. So it's difficult for unless you get into a really strong market, which we very well could get into this year, most of those are probably going to go sideways to lower. So yeah, it's interesting that you said that. That makes a lot of sense. So yeah, I mean, if you have something that, again, has not performed well, I mean, it's down on the year and it's in a downtrend going into the end of the year, that's something that could bottom around the end of December and get a bounce into January, regardless of what happens with the larger sector.
Yeah, and Canada has more favorable laws regarding tax loss selling than the U.S. With carry forwards and carry backs and such things as that. I used to know what it was, but I don't remember now. It's like it figures it out. The market knows Canada, it's just more advantageous to sell your losers. But in the U.S., if you've had a really winning year, then you want to dump some losers to bring down your tax burden and all of that. So yeah, we're looking at a real potential major advance. If it's not going to happen, then the only reason that makes me believe that it might not is that most people believe that it will, right? And so the market always acts to frustrate the majority of investors. At least that's always been my experience, having been one of those investors and been frustrated on many an occasion.
Yes, I mean, like I said, things are setting up really well, Kerry, but it wouldn't surprise me if the miners had to, looking at the charts, if they consolidated for a few months before a really big move began. I know we've seen decent moves in, the last month or two, and, a number of individual names have done really well. But in the larger picture, we're still in a correction here. We're still in correction mode. It's just that the miners have been really outperforming. So it would not surprise me if this correction and consolidation continued, into the end of winter, for example. There's no, the miners could consolidate for another 4 or 5 months, and the chart would still be really bullish, looking like a huge breakout was on the horizon. So it's just a question of, I think it's going to happen at some point this year, but I wouldn't make a super strong bet that it's going to happen in January or February. But that's just a guess.
Yeah. Yeah. It's so tempting to say it's always worked this way and it's going to work this way now. But the reality is that anything can happen. And you and I both know that. And really, you just have to kind of wait and see how the market actually behaves here. I mean, how many times have you heard it though? Oh, the market always goes up now, right? It always goes up, but there is no always, and you need to be wary of anybody telling you that there is, right?
Yeah, absolutely.
Yeah. So for the coming year though, where would you put most of your money if you were kind of just looking at the sector and entering for the first time?
Entering for the first time, I would go into GDXJ, and I would also go into silver. GDXJ the stocks look like they're going to move before the metals, and silver's really lagging, but I like silver itself just because if we get that big breakout in GDX, eventually that's going to flow down to silver. So I would say first and foremost GDXJ, secondarily silver. And I would do that. And if you're getting into the sector and you're new, it's best to do that and not wade into individual companies, because that can be just the volatility in those, especially for a beginner. That could be a real surprise.
Yeah, that could be. You don't really want to get in here. You shouldn't be gambling with your first dalliance into the sector, right? I mean, that's potentially fatal, could be very dangerous, right?
Right. Yeah, you really need to read some books and get educated. And I would say buy GDXJ and hold it, and use the year as a way to. You got to keep it simple if you're a beginner. So do that, and also get yourself educated. There's a lot of great material out there that can bring you up to speed on precious metals.
Mm-hmm. Yeah, exactly. Yeah, could not agree with you more. I think it's a sound idea, and just be wary, because there's no sure things out there. But the one thing, Jordan, we've talked about this so often, so many times in the past, this is like the one, or many of these companies are the one true undervalued sector in the market, right?
That's a very good point, Kerry. And I saw a chart this summer that showed the entire mining sector. Someone did a study, and they were concluding that, at least in terms of the CAPE valuation, the entire mining sector was trading near 100-year lows. So that it's interesting, because like when I wrote my first book in 2015 and I was looking at all the historical stuff I could find, I basically concluded that the gold stocks, the gold mining stocks around the middle to the end of 2015 were basically the cheapest they'd been in about 90 years. So, fast forward a couple of years and somebody else is saying that the entire mining sector is at a 100-year low. But when you think about it, the gold stocks, they've moved off that low in the last couple of years. So, the entire mining sector, the gold stocks are still historically extremely cheap. They're just not in the 99th percentile anymore. But when you look at the rest of the mining sector, that is extremely cheap now. So, it's really true that it really is the last cheapest sector. And I think we could have a really good year for commodities as a whole. I don't know if we're beginning a huge bull market in commodities, because I think that's more likely to begin after the next recession. But just looking at this year by itself, I do think that we're setting up for a really good year in hard assets, and it looks like precious metals are going to lead that. But there's opportunities in energy and also other commodities. So I would keep my eye on those.
Yeah, I'm inclined to agree with you here. There's not just one, and energy is taking a hit. Maybe it's because of, I don't even know. Maybe the fear of electric vehicles taking over the transportation market, and maybe that's going to happen, but it's not going to happen for quite some time. I don't see oil refineries being shut down in this country in my lifetime, or even yours, Jordan.
That's another topic that I have less knowledge on. So I can't speak on that as well as you could.
Yeah, well, trust me on that one. So there are some energy plays out there, right? And there are some opportunities, and well, I guess we're just going to have to see what happens next here. Anyway, Jordan, always appreciate you coming. Just tell us where to find you, your publication again, how it works.
Publication is the Daily Gold Premium. You can find that and a lot of free material at thedailygold.com.
Hey, not to mention the fact that we always read your articles on kitco.com. That's where I first found out about your work. And that was many years ago already. That's going on 9 years, Jordan. We've been playing this game here. But I think the rules are changing. The game is changing. The field is changing. And so are the players. And that's what's going to make it all interesting come 2020. Questions or comments for Jordan or myself? Of course, the email address is kl@kerrylutz.com. The Twitter feed's @KerryLutz. Facebook page is Financial Survival Network. Website, financialsurvivalnetwork.com. Sign up for a newsletter. We got one going out tomorrow, I think at 4:30 a.m. So if you're up early, you'll see it. Otherwise, when you wake up, it'll be waiting in your mailbox. Hey, really appreciate you coming on, Jordan. Always a pleasure. We'll talk to you again real soon.
My pleasure. Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.